Hello guys, welcome back to my channel. My name is Emmanuel. In this video I will be showing you guys, explaining types of traders and how you can know the type that suits you or the type of trader you are. Because in all the types of traders, all of them, if you know your game, if you know how to analyze using the BTMM analysis, and if you know your entry positions, you will surely make profits, massive profits in the forex market. It does not matter the type of trader you are. The most important thing is that you are able to trade and make profits. Now, it is also important that you know the types of traders and then know the one that suits your type of person, and then you can go ahead and start making profits in forex market. So in this tutorial I'll be showing you the different types of traders. The first, you have the scalper, the intraday trader, you have the intraday trader, and then you have the swing trader, and finally you have the position traders. Now these are the different types of traders you can think of in forex market. You have the scalper, the intraday trader, the intraday trader, the swing trader, and the position traders. All these people are all in the forex market and they are in to make profit. Now, because of the way forex market is, it is always nerve-wracking and requires all the patience. And sometimes most people don't have that patience. Some, due to fear, they are not able to stay for long in the market and they run away from the market, taking either their little profit or their little losses. So this set of people are the scalpers. They go into the market within 10 to 15 minutes or 20 minutes. They are out of the market and they go with their profits or their losses. Most of them are the liquidity traders, the BTMM traders, and you really understand what is going on in the market if you must be a successful scalper. Now you only need a few pips in the market, just 20 to 10 or 15 pips in the market, and you are out of the market, and then you look for another entry point and take your position. In this type of trade, the best time frame for scalping is always the 15 minutes time frame or the 5 minutes time frame. So when you are in the 15 minutes time frame, it's always good you also have a very good understanding of the candlestick patterns. You have the a very good understanding of the candlestick patterns, and then liquidity for liquidity traders, and then to compass it all, you have to know about BTMM trading. So this is 5 minutes time frame. As a matter of fact, you need a very good understanding of candlestick patterns. You need to understand the Marubozu, the pin bars, and all these single, double candlestick patterns that is involved in technical analysis for you to be able to scalp very well, and then for you to know when to leave the market. For example, this is a very good scalping point. From this point, and you sell your trade to this point, and when this occurs in the market, you should leave the market, and then you close your profit and leave the market for the market makers to do their thing. Now look at another point of scalping. You need to understand what is happening with the single candlesticks. Now look at this pin bar, inverted hammer, and then this candle here. You should be able to know that yes, you can sell to this point, and once you see this market, this pin bar here, the hanging man, you take your profits and leave the market. You can as well enter your market somewhere here. After you see this hanging man, you enter here, and then you take your profit here. So it's just about taking little profits and little pips in the market, as short as they are, 5 pips, 20 pips, and then you can decide to put in a relatively bigger lot sizes, and then you take your profits and leave the market immediately for the market makers to do their things. There are plenty scalping points. Even in 15 minutes, you take your market, you enter your position, you wait for like 15 minutes or 20 minutes, and then you leave the market immediately. Look at this point. You enter your market here using the W pattern, and you decide to exit somewhere here, and you take your profits with the little pips and go away in the market. Look at points where you can enter your market, and then you take your profit here and leave the market. So it's about entering and leaving so quickly in the market, but remember, you must have done your analysis. Do not trade against the trend of the market. Look at this, is a very good indicator that the market is about to go down. Look at another indication that the market is about to go down. You can take your position here and then go down within 1 hour. You have left the market with your profit. So that is for scalping the market. Now another one is intraday trader. This intraday trader, you will make your analysis using a 1 hour time frame, so that in less than 2 hours or 3 hours you are out of the market. In less than 2 hours or 3 hours you left the market. So they make their analysis using the 1 hour time frame. Make their analysis using the 1 hour time frame, and their target is about 100 to 70 to 100 pips, as the case, depending on the pair you are trading, and you are out of the market. You can decide to hold your trade for a full day, like 6 hours, just within a day. That is what intraday trader means. Within that particular day, you cannot approach the next day of the market. You take your market. Once you have done your analysis, this is a very good entry point, and you take your trade from somewhere here, from yesterday to this point, which is not up to 24 hours, and you leave the market. The next day you can decide to take this market as well, and then to this point you leave the market. But the bottom line is that you don't exceed 1 day in the market, or you just have to wait for the ADR to complete its level and you leave the market. You can trade from here to here. That's about 6 to 7 hours, and you leave the market. That is for intraday traders. So the next type of trader is they are the intraday traders or the swing traders. the intraday traders or the swing traders. The intraday trader or the swing traders, these guys can stay in the market for like up to a week or 2 weeks and then follow through all the trends in the market before exiting the market. Now the best time frame for this intraday trader or swing trader is the H4 time frame. That's 4 hours time frame. When you have done your analysis in 4 hours time frame, it takes at least 1 week to complete a level 1 in 4 hours time frame. So if you entered your position from here, from this point, it takes 1 week to complete this trend. So this is a swing trader type of trade, and this also complete 1 week to complete this trend. So this is a swing trader type of trade, or intraday traders. You stay in the market for like 2 weeks or a week to be able to complete your full cycle, and you analyze based on 4 hours time frame to be able to take this type of position. If you do analysis in H1, that is 1 hour time frame, and you want to stay in the market for 1 week, it may take you out of the market because it will be very close to your stop loss or your profit level. So you do your analysis using H4 and then you enter the market, even though it takes time to materialize before it finishes all the ups and downs, or before it completes the legs of the W or the M. It takes a lot of patience, which most people do not have, and they eventually get frustrated in the market and either leave the market with small profit or a loss. So you need all the patience you can get for you to be able to trade this type of market and then be profitable in it. So you use your 4 hours time frame and you analyze your market, and then you take your position using the 15 minutes time frame. The funny thing or the sweet thing about BTMM is that for you to take a very good position, entry position, you have to go back to your 15 minutes time frame and wait for your entry pattern to materialize, and then you take your position and then you leave the market for like a week or 2 weeks, depending on when you enter the market. That is when your analysis occurred, the day of the analysis, and then you wait for like a week or 2 weeks before your market level or your cycle is completed, and then you exit the market. So if, for example, you took your position somewhere here around this region, this is about a week, that is about 5 days for this thing to complete, and this also from here to this point is also about a week. So when you want to take this type of trade, you go to H4 time frame and then do your analysis in the market, and then you take your position, and this also is about a week, and this is also about a week. So if you want to complete like 2-3 levels of the market, you have to wait for like 2 weeks, depending on your position in the market. If the market has completed one leg and you want to go with the next leg, you have to go with for just 1 week. But if you started with the first leg, you can as well wait for 2 weeks to complete the cycle, and then you leave the market. So that is for swing traders or intraday traders. And then the last one is the position traders. The position traders are the hardest of them all, or the strongest of them all, because you wait for weeks or even months to exit the market. You can stay in a particular trade for up to 2 months, in months or weeks. Now you make your analysis using the daily time frame, or you use the weekly time frame. I believe what you are seeing here is, I think about, is in months. What you are looking at is question of months or even years. So a position trader, if entered here, can stay in this market for up to a year before exiting this market. So this is what you now have to understand your type of personality and how strong you are and how patient you can be to wait for a particular trend or a particular market to complete its cycle before you can exit. So if you are a person who don't have a lot of patience, you can go for the H1 time frame, or you go for your scalping, or even the swing trading. But for the position time frame, you need all the skills, you need all the patience, and you need all the nerves to flow with that particular trade. So if this video is good, if you like this video, please subscribe and then hit the like button and share this video. Thank you very much, as we come back with another interesting information about forex trading.